Hi, my name is Darren Joseph from HEJ.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today I want to talk about self-directed IRAs, or individual retirement accounts, and their use in golden visas. I've had like 3 people reach out to me this week, and I'm recording this on a Thursday, so it's been I don't know. It's just normally it's rare to get this sort of inquiry, but to get 3 in 1 week made me think, you know what, let me record some content on this. So obviously we've worked with US exposed clients or US clients that have invested in various golden visa regimes. But just to provide, just context, make sure we're on the same page, IRAs or individual retirement accounts are tax-deferred savings accounts intended to provide a source of income for retirement. Contributions to IRAs are made by the individual account holder and, depending on the particular type of IRA, by the individual's employer, like in the case of a SEP-IRA. The funds are held by financial institutions that invest them in traditional assets like stock, bonds, mutual funds. Self-directed IRAs do offer a greater degree of flexibility, but they also require careful adherence to IRS rules. IRS are super vigilant when it comes to this. Now, let's talk about golden visas. The concept of a golden visa fund is closely tied to the various golden visa programs, such as those in Portugal, Hungary, Greece, etc., etc. So essentially, they are investment funds that meet the criteria set by the host government to qualify for their golden visa programs, so to get you residency, and to get you a special type of residency, which often fast tracks your journey towards citizenship without the need to be physically present in the country for an extended period of time. So it's a big benefit. So these funds typically invest in various sectors of the economy. They can invest in things like venture capital, private equity, technology companies, cultural projects, and the like. So in terms of Portugal, which is where I get most of these inquiries, the goal of the funds is to drive investment into the Portuguese economy in sectors that the government deems to be beneficial. The minimum investment into these funds to qualify for the golden visa does vary, depends on what you're doing. But the key considerations that I want to share, there are 3 key things. 1 is due diligence. Investors should conduct their own due diligence on any fund before investing. 2, remember there's an element of risk. Like any investment, golden visa funds do carry a risk. And 3, most important, compliance is very important, that these funds all follow the rules set by the relevant government to ensure that the investor qualifies for the golden visa. Now, when it comes to the self-directed IRA themselves, there's certain rules about unrelated business income that are super complex. And for that reason, I cannot emphasize enough that self-directed IRA investors should consult their own tax advisors, and not just your regular tax advisor, but a tax advisor that is familiar with the really strict rules that the IRS has regarding the UBTI ramifications and other tax aspects of these sorts of investments, because it's really easy to run afoul of the rules. So you're looking at compliance in 2 spaces, both with your golden visa host country, in most cases it's Portugal, and with the Internal Revenue Service. So you need legal teams on both sides to guide you. I hope that helps. My name is Darren Joseph from HEJ.tax, and we'll see you next time.